Greetings. Now, as I think I had previously mentioned, yesterday was a fairly interesting day. And we had one of our friends contact us. Wanted to talk to Ellen about investment and retirement. Now, sometimes she might be a better choice. Yeah, especially if you're starting the ground floor. Anyway, apparently the issue here is there was a faux pas made at work. Character's afraid he might not have a job anymore. Yeah, he messed up. And Val is sort of in the age bracket, where he might or might not retire, could do it. He's getting tired of all this, and he was thinking about it. So he thought he'd talk to Ellen about what she does. Now, she's kind of an unusual situation, I think, personally, because, Ellen's old enough to collect Social Security, but she doesn't do it. She doesn't need to. Okay. She had other vehicles, other investments, other things that she had set up over the years that are taking care of her income. She doesn't need the Social Security, and so she'll wait until it's reached maximum value. I don't know where, if it's at 70, 72 right now. Not sure. Anyway, so she doesn't even collect. Now, I'm enrolled and I collect. I waited a little while in there, but, I collect, but I don't use. All right. These are important points because our friend came by mostly because he was trying to figure out, how he calculates Social Security, what he might get if he retires now, what happens if he waits, and so on and so forth. Well, to begin with, I was just a bit surprised that he didn't already have himself logged in on the SS website, which has got all the details. I highly recommend anybody who's, if you're over 35, log into your SS account, give yourself a password, and check on it periodically, just so you understand. You need that Social Security account to be able to be a platform that you will start your investment for retirement on. Now, most of us, when we're saving and investing and whatever, we're doing this because we hope to retire someday. Yeah, everybody should be saving all the time, because you'll need that money to pay your bills. But yeah, retirement is the major focus here. And if you don't have any idea, say if you're planning to retire at 70, what SS will be paying out monthly, and to become familiar with the fact that you're never going to get away from paying for Medicare. No, that's a backpack bunkie on your back you'll drag throughout all of life. Boy, I love healthcare in this country. But yeah, you'll never get away from that. And so you're going to have to think about that too, because if you're like me, you have the Medicare automatically deducted from my Social Security. Okay. And then, of course, there'll be these drug plans, the Part Ds and all that. Now, they're not very expensive, most of them, but they're supplemental insurance programs that cover that thing they call the donut hole. Yeah, there's a hole in our Medicare. And yeah, you can pick up an insurance policy that will cover the cost of drugs and such. It's a very messy thing. Anyway, all of this, you can find most of the information you need for that planning on your SS website. And, so you just go on in there and get yourself familiar. I was surprised that our friend had not, never been there. Didn't know, had, I guess, the mailers that we get sometimes, but that was it. So, well, moving right along, I'm listening to all of this because I was in there working on some stuff, and I know he asked to come by and talk to Ellen, and it's probably a good thing he did. I am not the best guy to talk to if you are starting at ground level, have no experience whatsoever. I can scare the pants off of you. Yeah, I dive in the deep end of the pool off the high dive when it comes to investing in money, all right? Yeah, I have very little fear. Very little fear. Been doing it for years, seen what happens, and Well, anyway, next thing that come up was CDs. Ellen's big time into these. She's as long back as I known her, she's always had a program of certificate of deposit with banks and savings and loans in the area. They're usually searching around for the ones that have the highest interest rates, and then she schedules them so that one is maturing as another is starting, and so on. So she has literally a calendar of these things going around. Okay, now personally myself, I have had little interest in them because during low interest rates, there were other vehicles that paid so much more money. Okay, so I did not bother with them. But lately, I have because interest rates are going back up again. They're good, and so if you're on the stick end of the carrot and you're paying for a Visa bill, or you have a home loan or a car loan, oh, the interest rates are suddenly getting to you. But if you're invested properly, say you have CDs and high interest savings accounts and so on, you're going to be picking up 4%, 4.5%, on every dollar you toss into that thing, and it helps offset the inflation. It does, yeah. And what I was surprised was that our friend did not know what a CD was. Oh, that did shock me. Okay, had no idea. It stands for Certificate of Deposit, and currently, most savings institutions, probably the one you got your bank account with, they offer them. Take advantage of them, man. Oh, because, let's just say, for instance, you got $30,000 sitting in a bank account, okay? Now, that money is there to be liquid. You're probably going to need it for something coming up, whatever it's doing there. And so you're going to need some of it to be very liquid, right? So you can grab it if you need it. But you don't need the rest of it to be liquid usually. I mean, if I got 20 grand sitting in a bank account that I could just grab, I'm usually pretty happy. That's enough to be able to get us through a lot of different things quick. So you take the other 30, if you had 50 in the account, you take the other 30 and you put it on a high interest CD. Right now, CD rates are running between about 4.3 and 5.5% interest. That's good. That's real good. They're very attractive at this point. And most institutions offer them. Now, Ellen, she likes to shop around savings and loans and such because she can get a little bit better rates sometimes. Me, I like convenience. I use internet banking. I just buy them from my internet bank, which in my case is Capital One 360. And they offer some really good CDs. They also offer programs when they mature to just roll them over into savings accounts and things, so I don't even have to maintain them. And they also have some high-interest savings accounts, which is the next thing here, and that is that right now there are savings accounts out there paying between 4.3 and 5.15 or 5% interest on just plain savings accounts. Now, when you got a CD, you're going to lock up money for 3 months, 6 months, a year, maybe more. I don't recommend going for the slightly high interest rate and locking them up for too long. I don't believe these interest rates are going to stay up here like they have for now, and so my personal feelings is just keep turning things over in 6 months. But that teach their own, Yeah, it doesn't really matter. It's only money. The point I made with our friend was he had quite a bit of money sitting in savings accounts and things, but it wasn't working. Yeah, it's just sitting there. Maybe they had 1% interest or something on these accounts, but I told him, man, get them accounts out there on the track and get them dollar bills working. If your dollar bill isn't constantly performing, so it's going to be pushing off more dollar bills as time goes on, well, you're in a bad situation. The economy's going to eat you. That's what it does. There's a lot of unhappy people out there right now because of that. Make that money work. High interest savings accounts, very safe, convenient ways of getting a little bit more money. Take a look at your savings. If it's not in something right now that's paying at least 4% interest, get it out of there. Move it. Yeah, put it in maybe the same institution as another account. In my case, Capital One 360, I have multiple accounts in there, and they don't all pay the same rate of interest. Yeah, that's the high interest ones are significantly above, about 3.5% above the conventional savings accounts, just in that one bank alone. Okay, so the high interest account may be in the same bank you're using right now. You just have to look for it. Those are two things right there. You absolutely want to do. Do not let your money sit around and get flabby in some low interest bank account someplace where the moths are going to eat it. Make it work. Oh, and then otherwise, this is where typically I begin to lose people. Stuff's pretty boring. I agree. But when I start talking about buying stock, when I start talking investing in the market, this is where people begin to freeze up. I had the experience yesterday because I had gotten into the conversation on investing, and whereas Ellen does own some stock, she's never done well with what she buys. And there's reasons why. I could tell you why, but she hasn't done well. And so she was not focused on it. She uses annuities and mutual funds and all sorts of other investment vehicles that do pay out. And she don't play around much with buying individual companies. Now, me, I love it. I've been real good at picking some strong movers. I hardly ever lose. Occasionally I've picked a few that really didn't go anywhere. Right now I got Richard Branson's Virgin Galactic. It's a loser. Yeah, I've lost money on it. Tesla, surprisingly, that has surprised me. Currently, at least, I'm losing money on Tesla. But anyhow, that's aside. I got out of the conversation because I didn't want to overwhelm things, and they were at one level, and I'm thinking at a different level, sort of. And, I'm hot on really making money with your money, but other people are more conservative. They like to play safe. They're worried. There's a lot of fear with people, period, and there's a lot of fear around money. The fear level between me and my partner it's a major gulf, really. She'll occasionally ask me about what I'm doing on the market, but she'd never take my advice. Never. Even though it's good advice. She won't take it. It scares her. Yeah, the way I do things is frightening for her. Anyway, as I walked out, they continued the conversation, It was only later over dinner that I come to find out the classic comment came up after Bill leaves the room. Me and everybody in my family and all the people I know are all afraid of investing in the stock market. This is what a friend told Ellen. I wouldn't tell me that. I'm too gung-ho over it. You don't tell a guy like me who owns 1,000 shares of Amazon, don't invest in the market. It's scary and dangerous. And I go, huh? What? What? Right. And so they don't talk to me about that stuff. But he did talk to her. And, this is something that I have faced my entire life, and I'm sure a lot of you out there listening to me right now probably have angst over this. Probably do. It seems to be, in the bourgeois, middle-class America, seems to be, pervasive mindset. Yeah. It's all over the place. The reason I can say that is because as a business manager, as a man who was in charge of companies, part of my job was to sell people on getting on board 401ks. And man, That's where you face it. Yeah, you hit it right in the face. Just how paranoid people are about investing. It's so pervasive, that it's got a little mysterious, because sometimes I swear it's a conspiracy. The rich in this country really make their money not by working, but by investing, usually with other people's money too. On the other hand, the poor or the middle class or whatever, we believe in the work ethic, and if you work hard, you'll succeed, and save your money and whatever. Well, that whole type of thing. But investing? Oh no! Don't go on the stock market. You're going to lose everything you have. It's very common. Get out there in the streets, start talking to people about this. You're only going to find two states of mind on it usually. Yeah, there's the people that do it, and they love it usually. There's people who do it and blow it, and they hate it. It has so much to do with your ability to tolerate risk and fluctuation. The markets go up and down all the time. All right. Like yesterday, I was looking at Amazon. Now I have 1,000 shares. I was showing it to our friend. And so Amazon, in a single day, I believe it went up like $3.60 a share. All right. Well, I got 1,000 shares. So what's that mean? That means yesterday I made $3,600 off the Amazon stock in a single 24-hour day. And that type of thing is very typical with large blue chip type companies. I had encouraged the idea that I guess our friend had an IRA that had been rolled over from some 401k with a past job back on the mainland, and was sitting somehow associated to a savings and loan over there. And I had kind of encouraged him to take it, roll it over onto an online brokerage where you can find investments and you can manage and maintain everything with a click of a mouse. You can look at it daily. You can find research and everything. And again, I told him, I think he had probably mutual funds in there, and mutual funds can be all right in the individual retirement account. They operate okay for people who have a high level of fear about investing. Funds are maybe your best bet. I use them sometimes on specific subjects, like for instance, commercial rocketry right now, space flight. Hard to buy into this company. So much of it is held private. But there are ETFs, exchange traded funds, that are focused on space flight, and I own 4 of them. Out of 4 of them, 3 are way up and 1 is down. So, anyway, that's a way I do use funds. Yeah, and that's why myself. Otherwise, I prefer single issue stocks. I buy companies. Yeah, that's what I do. There's a lot of different approaches to this, and a lot of different illusions too about approaches, but I think a lot of people think of going into the stock market as thinking about those traders on the floor in the jackets running around, buy, sell, sell, buy, that kind of stuff. Well, we all do a little bit of that, but for the most part, the long-term investor who's thinking about going for retirement, that's not what you do. Yeah, you only buy and sell stuff for reasons like you get there towards the end of the year, you look at stuff and you got a few issues that haven't been doing anything at all, but you got a few others that maybe been doing pretty darn well. Well, maybe you want to sell out the dogs and buy some of the winners, or maybe invest in something new, or that type of thing. We assess the account, maybe Ford's interest rates have gone way up again, and you don't have much for it, or you don't have any, but you got some other things over there that really haven't been doing much. Well, maybe you want to get rid of all that, take the money and stick it in Ford's coffer. There's a lot of reasons why we get around with that, but we're dealing, really, my suggestion to people who are fresh at this is to stick with blue chip stocks that pay good dividends. Yes, many stocks pay a really good, every 6 months they'll run you a dividend out usually. It's similar to a CD or a high interest savings account, but the difference is that oftentimes the stocks that you put money on that are paying you dividends like a CD will also have growth. Consolidated Edison, this is a utility. Okay, utilities are not wild. They're not fluctuating. They're not risky. Okay, we all need them. They're just part of the infrastructure in the country. But Consolidated Edison does have some growth, and Consolidated Edison also pays a decent dividend. At the moment, I think they're paying out at around 3.5% or something on that order. But there is growth in that utility too. So when you put some money on it, unlike a bank account or a CD, that money grows one way and then the dividends pile up this way. And so you get a double income from it. At the moment, high dividend paying stocks, I'll toss out a few of them over here worth note. Scott's Miracle-Gro. Yeah, Scott's Miracle-Gro is paying a 4.3% dividend on the market. It's a quality stock. I don't like everything they do. Okay, but it is a garden-related stock, and so people listening to a garden channel might want to consider being invested in Scott's. Miracle-Gro is the last fertilizer I'll reach for, but the same company makes Osmocote, and I do sometimes use that one. There's products that they have that I don't want anything to do with. There's products that I think are okay. Garden company, high dividend. Perhaps you're not going to do any serious damage to the planet when you invest, in people planting the stuff. Another one. People love electronics, man. Best Buy. Yeah, Best Buy. It's a 4.55% dividend at the moment. Best Buy is a fair growth company. So, this. Another one, too. Definitely, I keep saying it, and that's Ford. Ford's price range is really just like this. Ford, it never goes up to $100 a share. It never drops down to $2 a share. It's pretty much always riding somewhere in the $6 to $14 range. That's just about where Ford is always at, and like right now, I think there was a bit of a dip in the price on it. I think it tends to be running just about the midline right now of its average value. And Ford's paying out a 4.82% stock dividend, rather, and it's selling for $12.94 a share. So it's barely at about $13 a share right now. It goes higher than that. It goes lower than that. My take on Ford is to get on while the price is down on a bad day. Pick the shares up for a fair price when they're a little bit lower. When the dividends are being paid. And there was a time prior to COVID where for a long time they were paying over a 10% dividend. After they stopped that, when COVID come on, I went and sold them, and I haven't brought them back again. But I still remember the days that I was getting 10% off of my Ford shares, So there's nothing here to be scared of. Not really. Don't follow people around on social media when they go, oh, buy this, especially when you hear anybody talking about a singular investment. Everything that makes good sense for the investor, for people, is diversification. If you got $5,000 to invest, put it in 5 different baskets, please. Yeah, because my history with investing, I've been doing this for quite a while, is that, I'm no expert, but when I'm picking stocks and companies, probably 80% of what I pick doesn't do much. Yeah, a few of them I really could be real losers, real dogs on occasion. But I usually don't pick too many of those. Most of the time when I get doggy companies, I just get things that just don't seem to move much, and I don't make a lot of money off them after holding them for a long time. But most of those, I'm able to turn them around later and just get rid of them and say, well, that wasn't a great idea anyway. So about 80% of what I invest in, that's what it is. Out of the 20% left over, probably 80% of that just pays good returns. Good solid companies, good standing, fair growth potential, whatever, but decent companies that do pay a fair return, and they're worth keeping in that portfolio, okay? But out of that 80%, maybe 20% of that, oh boy, those are earth shakers. Yeah, those are the Googles and the Amazons and the Netflix and the Starbucks and all the kinds of stocks that if you had invested in those, say, 10 to 15 years ago, boy, you'd be sitting real pretty today. Yeah, those are great stocks. Whether they are or not today, I don't know. Investors have all kinds of opinions on that stuff. Enough of that. Diversify. Don't follow people around on social media who are saying, oh, this is hot, you got to do this, invest here. If they come up and they say, make sure that you diversify in your portfolios, well, I listen to that person. Yeah. I had good teachers. Honestly, he was the man who wrote investment columns and economic advice in the Bay Area papers over there, a man named Pletchett. He's good. Yeah, I listened to him for years. I learned a lot from that man. Sadly, he was an older man. He's passed away. Another man that actually I pay close attention to is Warren Buffett. I consider myself to be a mini Buffett, okay? I do approximately what he does. I buy companies. I don't, necessarily buy trade stocks, okay? I buy what I know. And that's very important. Buy what you know. Yeah, Buffett knows railroads. He owns lots of railroad. He probably owns half a railroad. Now, if I was interested in railroads like Warren was and thought I knew a lot about them, well, where Bill might buy 100 shares, Warren buys half a railroad. But the strategy is basically the same. Yeah, it's pretty much the same. We're buying companies, and we're in it for the long haul. These are investments in American businesses and American industries, and I'm not terribly focused on the fact that markets fluctuate. Yeah, they always fluctuate. So what? Seems to be the problem. People who micromanage stocks and maybe don't even have a divided portfolio. Well, own one or two investments maybe, and when they start going crazy, plunging or something, then they will in turn panic and sell. Well, of course, you lose your shirt when you do that. You don't panic and sell when it's doing that. If it was a good investment to begin with, and it's just following the curve of the market, it's going to recover. This is very important. It's very important. Yeah, right now things are pretty hot. We're having a pretty good run out there on Wall Street. Anybody who owns stock portfolios, if you're well invested, you're doing fine. Yeah, I think this is one of the gaps right now in the feelings of wealth and economic recovery in America. People who have decent investments in 401ks, if you've got good investments in IRAs, if you're just a person who puts money into the markets, or you're taking advantage of the high interest rates today on any vehicle, well, you're doing all right. You're probably pretty happy. And like me, you may be concerned about inflation. Yeah. I'm not overly concerned myself about a coming recession. All these egghead economists out there seem to tell us they can land this thing. Well, if they can land the plane without crashing it, good. Usually they crash it. But, yeah, so I'm not terribly worried. Okay. That was yesterday. I had a little visit with the neighbor about investing, and I was just so surprised, honestly, at some of it. The one I wasn't surprised at is the fact that he was frightened of the market. Hang loose.